Okay, so welcome everyone. Yeah, like I said, this is the extended version of the market brief. We put it on our channel. So if you go ahead and see our channel, you get here the market brief, a daily report. That's how we call it. And but I would like to show you how this is done, and in order to show you that, I'm just going ahead and go to my trading platform, and I'll show you first how you read this. For example, my favorite assets to trade, my favorite cross pairs basically during the day is dollar CAD, euro dollar, dollar yen. The DAX index is also pretty good for the intraday, and also gold and oil. Since we have only 15 minutes, I'm gonna go through dollar CAD, euro dollar, dollar yen, and then to show you, if we got the time, gold and oil. Now, how you basically know, and that is the first question you had to ask yourself. If you're trading during the day and you're planning also a long-term strategy or medium-term strategy, how you know that? Like, how you know that the market is going to go up or down the next day, the following day? Particularly in this, in the currencies and some other commodities, since the volume is too high during the day, you may get the chance to keep your entries for the next day or to keep your entries for the rest of the day. And yeah, so what I'm about to explain you now, it is how, without any indicator, just reading the market price, you can know and you can see if the market is going to keep going up or down for the next day. So how do you basically read that? Let's get started with dollar CAD first. Now, there's two moments during the day that you must know when the market opens and closes. So as you know, you got the Europe market, the Europe market, and they opened in our central time between 4 a.m. and then we got the US market opened between 9:30, 8, well, we can say 8, 9 a.m. So basically this is the price that you need to know when they open, and also here. Now, if the market closes above this opening price of US and Europe, it means that the market has an open interest for buyers, or the price is gonna keep moving up. So you got buyers when the market finished above the opening price, and then the opposite, you got sellers if the market closes below the opening price. So this is what you need to know: when the market opens for Europe, when the market opens for US, and when the closing market happens. Of course, we don't consider the closing of the US market. We only consider the closing of Europe market, because that's what most volume is. The US market will not change the prices after they close. The only market that moves and will take care of, we consider the closing, is for Europe, not for US. So that's one thing that you need to know. So that's the reason why we pick this time of the day for our market brief, because like I said, the Europe market is about to close, and now we know exactly what's going to happen with dollar CAD. Now we know exactly what's going to happen with all these different assets and instruments. And in order to know that, it's quite easy to see it. So for example, you go ahead and put your the cross of whatever you want to analyze in 1 hour, and then from here on you know exactly when the market opens and closes. So here, this candlestick right here, it was the opening of US. US opened here on this candlestick, and Europe opened here on this candlestick right here. So this is Europe and this is US. So now the closing of Europe is about to happen, and what's going on now is that the market's going to close above the open price of US, but it's about to close equally of the opening price of Europe. And what that means to you is that the market in dollar CAD tomorrow, or maybe for the rest of the day, is going to maybe give you some more sell entries or some more sell prices to enter and not to buy. So once you know the opening prices of the market, Europe and US, then you need to consider the closing. This is the closing. So like we said, US opened here, Europe opened here, and the market is about to close here. So for US, the market is good for buyers, and the market they finished to buy. And for Europe market, It's irrelevant because they open here and they basically sold when they open, and now the market is exactly on that level. So what we do here, it is now we go ahead and go for 15 minutes, and then we say, okay, well, if the market in Europe opened here, right, on these levels, then that means I need to go and see the sell prices below the market price, because if they close here, then you go ahead and see what sell prices you have next. And we got 21.30, that is one sell price, and then we have the 21.24, that is another sell price, and then we have the 21.18, that is another sell price. Okay, now what if the US market wins the area and they get the price and keeps moving up? Now, since we are below 130 in dollar CAD, we know that it's only for sellers. It's a seller's pressure area. So if you buy, you better buy into a good price, because the market today finished for the buyers, right? The market today finished for the buyers. US open here, Europe open here, and that means that your dollar CAD, it has more chances to go up than down. But since we are into sell pressure area, then we better wait for sell prices. So that means that we're not going to buy dollar CAD, even though the US market finished for buyers. They have open interest for the price to keep moving up. Now, like I said, we should not consider any buy entry, but wait for the price to go up and then sell for those prices. So what's going to happen next with dollar CAD? Well, like we said, if it goes down to 21.30, it goes down to 21.24, 21.19, and it may go down to here. And that's it, you see. So the opening and closing of the market helps you to see when the market finished for the buyers in US, when the market is finished for the sellers in Europe, and then when the market is going to close. It's basically if it's above the open price or it's below the open price. If it is above the open price, then the market finished for the buyers. If it is below the open price, then the market is finished for the sellers, which doesn't mean that you can actually go ahead and buy or go ahead and sell. But you plan your strategy based on those prices, based on those levels. So if we have the opening of Europe here, and then we got US open here, then we better wait for the price now to get down to the opening of Europe. So that way you basically just don't expose yourself into a level where you know the market is tending to go and buy and not to enter sellers. You see, so that is for dollar CAD, the 21.30 will be the perfect entry point for the sellers. Now let's see euro dollar, how the market's finished today. And we entered today for sellers, euro dollar, and the market opened here. Let me go ahead and delete all these lines. So what happened with euro dollar? The market opened for Europe, open here, and for US, open here. The market is about to close over here, so it's quite easy to see. Europe, US, what's going to happen with the price is going to keep going down. The closing of the market is below the opening. Exactly. So let me go ahead and wait for 1 second here. Yeah, no, I'm going to show you what happened with dollar yen, which is quite different. Okay, so for euro dollar, like we said before, it's quite easy to see it also, and the market from now on is going to keep dropping, but we are into buy pressure area with euro dollar. So if we are into buy pressure area and the market is finished for the sellers today, that means that it's going to keep dropping tomorrow also. Now the next sale price that we have in euro dollar, it is right here. It is the 1950. 1950 adds another sale price, gets the level down to 1924, and gets the level down to, we got another price right here, 1910, 1915, that is another sell price, goes down to here. So one more time here, euro dollar is very easy to see it. If it gets down to 1950, that is most sell prices that we have in the area, 1950, 1942, and it's going to finish at 1924, 1915. Okay, so euro dollar is not as mixed as we saw dollar CAD just now, It's easier to see it. The market open here, and they're about to close right here. So if the market open here, open, open, closing, then means the price is going to keep dropping. Now, like I said, it's buy pressure area, so you better identify the sell prices. And the next sell price, it is 1950. 1950 goes down to 1942, goes down to 1924, and goes down to 1915. So if you plan to sell, it is okay as long as you identify the sell price and you know exactly what is the market range from the 1950. And like we said, it's going down to 1924. So that is for euro dollar. Now let's go see for gold. Gold, it did not have that much activity today, but we know what the market did. So we go ahead and you repeat the process. You go to 1 hour, you control the open price, open of Europe, open of US, and that means the price is below the opening, so it's going to keep dropping. Great. Now you have to know that gold, it is into the buy pressure area about the 1300. About 1300 there is a buy pressure area, so you better go ahead and see this next sell prices, because the market finished for the sellers today, and that's, like we said, more likely to go and keep dropping the price. So we identify the sell prices, and we got 1331 with 25, that is one sell price, goes down to 1329 with 64, and that's pretty much it. The market goes down just to these two levels, and that's it. That's all they do. After that, if we keep selling, it has to be below the 1329 with 64. Okay, and yes, because these are the only two left prices for the sellers. And since we are into buy pressure area, we cannot trust the sellers too much. So we just sell down to here. That is the last information that we have. Now, below that level, then we can keep selling, but that's another story. We need to be identifying all the sell prices in the area. But for now, that's all we got for gold. Yes. Now, if I want to keep selling in gold, below this price is 1329, 1329 with 64. That is again for the sellers. And that's all you do with gold. Let's go ahead and see dollar yen now. Dollar yen, would you repeat the procedure? Go for 1 hour, identify the open price, the open market, Europe here, US here, and that means if the open prices are here for both markets and the market is about to close now, then it's more likely the price to keep moving up. And the next level for dollar yen, it is 109.24. That means it is okay if you keep buying. If you buy dollar yen, yes, but you gotta know that it's also into sell pressure area. Now, the next levels, 109.24. So as the market keep moving up, then and you are into a sell pressure area, you must consider what are the next buy prices. So from 109.24, it may keep moving up to 109.32, and from 109.32, you go ahead and see some more other buy prices. But you have to move very carefully because, like I said, this is into a sell pressure area, and you cannot leave if you enter against the pressure of the area, you cannot leave just unattended some of your entries because you're against the pressure of the area. So you basically can enter, yes, but identifying correctly what are the lowest buy prices. Let's go ahead and see now for crude oil. Crude oil was, well, here we don't have to see, that much of activity with Europe. And depending on what crude oil you trade, if you follow the WTI or you follow the Brent, then you see those opening prices. That means for the Brent, you see the UK opening, and for the WTI you see the Texas, so US market open price. But what is very easy to see is the market open here and they are about to close here. So if the market closes above the open price, then you go ahead and see what other buy prices you have in the area. In this particular case for the crude oil. And the next buy price for crude oil, it is right here. It is the 48.19. 48.19, it goes up to 48.32, 38.42, 32. Now the thing is that you are below 50. Below 50 is a sell pressure area. So if you enter into a buy position with gold, with crude oil, then it will be better just to wait exactly the confirmation. That means the price has to be exactly closed up to the 48.17, 48.32, and that's all you got. Now you cannot leave any buy entry with oil below 50 and just buying like long-term strategies. If you buy, it has to be a very short and meditated entry because you are against the pressure of the area. But it's very easy to see how the market finished for the buyers at the crude oil. So the market is expecting the price to keep moving up the next day. And that's all you do. That's all basically what you do. Yes, it's in 5 minutes how to read the opening and closing prices and how you basically trade upon those levels. Now, what you have to be very careful is when the market open and above the opening price and you are into a sell pressure area, like what's happening now with euro dollar, for example, or gold, that's when you have to be careful if you want to sell because you're against the pressure. Now, if you're in favor of the pressure, then there's nothing to basically worry about because you are with what's winning in the area, with the buyers or with the sellers, depending on the situation. So that's how you basically, in 15 minutes, read the opening and closing the markets. Yes, and we're gonna keep doing this market brief within the next few days. As long as it's useful and you can see exactly how it behaves, that's that's all we care. That's all we care. That's right. Okay, there's been a pleasure, and we're gonna upload this. We're gonna send it to investors so they may have this recording available for you within the next hour or so. All right, thank you so much. You have a great day.